Government has launched the CPSE ETF. Sanjiv Shah, Chief Executive Officer of Goldman Sachs Asset Management, joins us. Sanjiv, good afternoon. Thank you for joining us. First, a very basic question. Tell us a bit more about the CPSE ETF product in terms of maths and index benchmarking.
If you look at the base date of 1/1/2009 till about May 2013, in fact, this index outperformed the broader market, which would mean that basically when the markets are not doing well, when the economy is not doing so well, this is the index which works. Beyond that, what we are going to do here is when we shall launch the NFO, there is going to be a 5% discount for all investors. The NFO ends on 21st of March, which is Friday. And for retail investors, investors who invest less than 2 lakh rupees, there will be another discount in the form of loyalty bonus, wherein each investor who has held on the units for 1 year will get for every 15 units held, 1 unit. So if he stands today here, there's an approximate discount of 6.66%. So if you're a retail investor, you get a 5% of upfront discount, nearly 6.66%. And then there's a dividend yield on this index itself has been about 3.7% over the last few years. So if you all add up all of that, the investor gets about 15%, if you want to call it a kind of downside safety net. I mean, it's not safety net as such, but 5% discount, 6.66% discount, and a 3.5% plus dividend yield provides some amount of safety to the investor. So, if you believe that basically the economy is going to turn around and do well, the expectation is that this index will do better than what the broad market did. It's borne out from 2009 to May 2013. And the discounts offered to the retail investor would provide an ability for the investor to get return which is a little higher than what he would expect if the market performs.
So which are the top 10 companies included in the CPSE ETF?
The selection was done by IISL. So if you look at it, you have the top large PSU companies, ONGC, GAIL, Coal India, and all of that. So if you look at the composition provides you an ability for you to participate in kind of energy and commodity space when the economy is actually turning around. These are the spaces which do better. So if you look at the companies which are the 10 companies which are there, this is what really happens. ONGC, GAIL, PFC, REC, and all of that, they really perform well when the market's turning around. So we think this is a good mix of companies for the retail investor.
Sanjiv, but the billion-dollar question is that do you actually see retail appetite for this kind of product?
Okay, let me answer the second question first. If you look at how the retail participated in the last offering, which was the Engineers India offering, they have really come in and invested quite substantially in the offering. Same for Power Grid. So if you look at the retail investor, they are looking for good quality offerings. And given that basically we are offering the retail investor nearly about 5.5% plus 6.6%, we do believe that this is an offering which they would look at very positively.
So Sanjiv, will the government sell shares to this ETF at a discounted price, and will this benefit the owner of these securities?
No. So what happens is, there's an index. Based on the index and formulation of price, all investors will get a 5% return, discount, sorry. And the whole idea is that basically Government of India is trying to encourage people, especially retail investors, to invest more money and be invested for a longer period of time. And hope that, basically this NFO will drive more and more retail investors to come into the equity markets and participate in the growth of the markets as such. And the whole idea is the discounts being offered are being offered basically for retail investors who take a long-term view and take advantage of that.
So how much do you expect could be raised via this ETF product?
The size of the NFO has been is kind of capped at 3,000 crores. We cannot accept more money than 3,000 crores. Assuming we actually get more than 3,000 crores, we'll be paying back to the investors in the formula as defined in the offer document. Our hope is that basically we'll come closer to that number.
The rupee has recovered, but there are internal or other international events that could trigger uncertainty again. Do you see a flight to gold by investors purely for safety?
Look, gold is something which Indians buy anyway. So, it's not necessary that basically, world events really drive people to do it. But you look at the other way around. What has happened is the rupee has been stabilizing. So that, does affect the gold demand in India, because most of the people do buy gold when rupee is volatile. So our view is that, basically, we don't know what's going to happen to the international markets. We still recommend people that basically they should buy gold ETF if they are underinvested in gold, and sell if they are overinvested. So that's, again, what we would advise most of the investors.